Welcome back, and joining us for a look at the equity space is Cobus Potgieter from Southern Cross Capital. Thank you so much for your time, Cobus. Quite a lot that we have been digesting today. And I guess, really, let's start off with what has been highly anticipated, and that is BHP. And clearly they decided that they still want to stick with Anglo, coming in with another all-share offer. But a third offer, Anglo American rejecting it, but basically saying that they're still willing to talk to the board. What have you made of those developments, but also how Anglo is choosing to move forward?
Look, okay, this is complex, just as Anglo's board have rightfully pointed out. Today was less than 24 hours before the deadline of expiry. So in the UK, they have this 30-day rule, which I love saying live on air. It is the put up or shut up rule. Once you have indicated interest in acquiring a business, you have 30 days to make a firm offer. If you haven't managed to get that done within 30 days, you have to shut up for 6 months. So you can't keep sort of bait and switching the market, manipulating shares and trying to sort of bully smaller companies. So that deadline is tomorrow. That's why we had the sort of final offer. It is a final offer, but the final offer is subject to there being no rival offers, no counter offer from Anglos, or no material changes, right? So ultimately, Anglos have rejected it as expected. They dislike some of the unbundling proposals. You know, they're willing to sell off some assets, not all of them. They believe some of the assets are worth more in their hands. They have their own now restructuring and value unlock strategy. To be honest, this is all good for investors and Anglos, right? So either we're going to get a suitor that's going to pay way too much for these assets, or not way too much, but let's say more than they were worth a month ago, or we're going to get management to get off their backside, stop building their own empire, and right-size this thing and fix it and make it more focused and unlock some value for shareholders. So that's a really, really nice outcome. We haven't had that rival bid, which the market was largely expecting within the 30-day period from the likes of Rio Tinto, for example. But at least we're seeing now the boards are engaging amicably, and they sort of indicated that we're having open conversation. This is not as hostile as it was, even though we are, you know, on the face of it, rejecting that offer. So this is not over, despite the put up or shut up expiring. The story's got a long way to go, but altogether, nice outcome for Anglo shareholders. I think there's more upside from here.
Yeah, it's really quite interesting also the language coming out of Anglo American. As you say, it's not as hostile as it was initially, where now it seems that they're more willing to talk nicely. Let's talk about Pick n Pay, because investors seem to be talking nicely to Pick n Pay today as well. At some point, I saw that share price surging about 7% after the release of the year-end trading statement, seeming that Boxster is still flying high, Pick n Pay remaining the underperformer here. As expected, the retailer says it will swing to a loss. What did you make of what Pick n Pay produced, and also how markets reacted?
I find it interesting that none of the, call it, credible, highly rated sell-side analysts came out with solid explanations for why this rally. It was more around the, call it, the brokers, with their analysts that were pushing opinions, trying to explain the move. Ultimately, I think this is a little bit of a relief rally, which is misguided and probably short-lived. It is a terrible set of results. Obviously, I think the major mismatch, even stripping out the impairment charge, is that this business has gone into not only a full year loss, which was anticipated and pre-announced, but it's clear that H2, which is traditionally a much stronger half for them, was also loss-making. Let's not forget that Boxer is quite a small portion of this business, and Pick n Pay Clothing, which they keep bringing up, you know, as the silver lining, is also a very that's minuscule. So overall, I think you know, there are still structural issues, and we have no detail. We've been told that we are progressing well, and we commit to giving you a proper guidance on how the rights issue will work by the time we do our results announcement, which is in a week's time. And that's essentially when we're going to get detail. For the moment, we don't have much, but the fact that, where they've once again alluded to engaging with the debt holders and getting those covenants pushed out subject to the restructure without indicating engagement with shareholders, that to me is concerning because they require shareholder support. The shareholders are effectively assuming the debt, because the rights issue, the full value of the rights issue is meant to pay off debt.
Yeah.
So that's essentially the course we're taking here, and there's still a heck of a lot of uncertainty. And if they can't get this restructure done, it's clear that there's sort of a noose hanging around management's neck here, and that the business is burning profitability, and there's no clear outcome in
Yeah.
terms of how they're going to fix it just yet. We need to see the details of this deal and whether or not it's getting broad institutional shareholder support whilst the Ackermans are retaining control.
Well, talking about shareholder support and a relief rally, it would seem that Life Healthcare also got that, as we saw investors breathing life into that share after so much pressure recently. They came out with their interim results, revenue up 7.8%. We did have those normalized earnings per share from continuing operations climbing 8.4%. What do the markets hold on to here?
Yeah, so you pointed out normalized, right? So we've got a clean set of results post the exit from the Alliance business. That was probably a bad foray, once again, by a South African business purchasing massive offshore assets.
Yeah.
They really made a substantial capital loss here, frankly, overpaid for the asset and didn't get as much as anticipated, but ultimately cleaning it up, fixing it, maybe making a little bit on the forex through the weakening of the rand, that's to their benefit. Paid a fat dividend because they had at least paid down this asset over time, so that was quite positive. And this is a nice, clean set of results where we compare compare with the previous period with those Alliance numbers stripped out. Very good set of results. We know Life Healthcare have been pursuing a more aggressive growth strategy than their peers, particularly in terms of network, whereas the likes of Netcare have almost shunned network and they want full margin. They want those discretionary operations, which are really lucrative. Life has pursued the network business, which is, I used to be a member of Delta Core, which is one of the big discovery networks.
Yeah.
So their hospitals are largely being included in those networks. It means lower rates, but it means more patients. And again, some normalization post-COVID as well, which has also benefited them. And additionally, the sort of value add post-hospital business, I'll call it the mental health, rehabilitation,
Yeah.
these sorts of businesses, those performed particularly well. So there's some normalization happening there as well. And generally a good set of results. And we've seen the share up in excess of 6%, I believe, today off the back of these results.
Indeed. Well, let us get to your stock pick quickly for today. Cobus, what are you picking?
So I had to sheepishly ask your producer if I'm allowed to pick a short. We've already discussed it, I suppose. I'd like to go short pick and pay at these levels. I don't believe that the restructure plan is all that credible. I don't think that with the Ackermans retaining control of this business, again, they only have 25% of the economic rights, but they retain through a pyramidal share structure, which used to be pyramidal. It's now been changed into a higher voting rights structure. But ultimately, they retain control, and that has ultimately led to sort of management which they approve of coming in. And I don't believe their strategic vision has been good for the business of late. I don't believe other shareholders will either. And now they're looking to other shareholders to help them recapitalize this business. And ultimately, they need to relinquish control and let professional management take over and fix this business. There is certainly value. I just don't see in its current form, with them retaining control of both Pick n Pay and Boxer Post and bundling, that actually being unlocking the value, and putting Pick n Pay on a path to profitability, because ultimately their competitors are not sitting still, and we've seen anecdotally that Shoprite is eating their lunch. The well documented franchisee, for which Pick n Pay applied for liquidation, ultimately gave all of those properties to ShopRite, ultimately leasing those stores to ShopRite, and all those stores are changing from Pick and Pay to either Checkers or ShopRite now. This sort of thing's happening to a distressed business, and a lot needs to happen quickly, and I don't see this turnaround strategy actually being what the market expects.
Whew. All right. Well, thank you for that, Cobus. Really, really appreciate your insights on what has been moving investors' money today. That was Cobus Potgieter from Southern Cross Capital with your market analysis.